All right, guys, we are waiting on Blue Lion Finance. And as we can see, guys, shots fired. Absolutely crazy what's going on. I think, and he's back. Hey, we're live, man. Just so you got a heads
We're
up.
already live. Here we are.
Dude, shots fired. What's your opinion? Are you team financial education? I know you're team everything money.
I am team everything money. I am a value investor. Paul and the team, they have a system, they have a strategy, they talk about it consistently, and I just think they're each one of them standout individuals that are consistently delivering through on value for YouTubers.
Yeah. All right, man. So I came into the YouTube world kind of a fan of Jeremy just because he was charismatic. Now, this was like years ago, and thought he knew something about investing, but then time passed on and I saw he didn't have a process, right? And some of the stocks he was picking, I started diving into him, doing the DCF models, doing future, kind of just doing my models on what I think the valuation should be on some of these stocks. Couldn't seem to see why he was paying X, Y, and Z for them, and really started to lose respect when he started pushing these stocks on the channel. And he's definitely caught a lot of heat for it. I will say this about him: guy is transparent, man. Though his accounts blow up, he shows you he's down 300, 400 grand. Like, he's transparent. I give him that.
Look, I'm gonna share that when I first got into the game here and really started actually jumping into YouTube for a lot more of my information, if you will, in trying to find better stocks that are out there, or doing the whole deal. Andre Jick, Ram Stefan, Jeremy was one that came later for me, but these guys really all kind of shaped the YouTube journey for me. And but one thing I always noticed with Jeremy, because let's be honest, Andre Jick is really a dividend investor, and I know we speak about him often in terms of his editing and the videography. It's incredible. I love it. Graham Stefan, I think he's one of the first guys that jumped onto YouTube and really took hold of the financial track. And, but Jeremy never impressed me as much as the other two. And particularly because we just have vastly different investment styles.
Yeah.
That's probably why. I was just looking at the two different portfolios, Paul's portfolio and Jeremy's portfolio. Now, I'm going to throw this out there for you. I don't know if you've looked at their portfolios. There is one stock that they both have. I'm curious to know if you know which one that may be.
So it's Tesla. No, Paul wouldn't own Tesla. No, it's definitely not Tesla.
Paul would not own Tesla.
No. I'm guessing it would be an oil company or something like that.
I'm going to give you a hint. It's a tech play.
Apple.
Not Apple. We're going Facebook. They both have Facebook. I was actually surprised to see that in Paul's portfolio. Well, not necessarily, but
depends when he bought, because Facebook did get cheap. What, in 2018 when they had that big drawdown? Like, that's when Facebook was like, you had to look at it there because they were growing, and then the market crashed, and just a good opportunity right after their split. I think it was an interesting buy I'm thinking, I'm sorry, I'm still thinking Apple. Yeah. But Facebook, I mean, that's a good value play.
It is. I mean, look, you could be long Facebook. I think we spoke about Facebook before. It will come back. I think not financial advice, but I think it will come back. Right?
Hold them to it. Hold them to it, ladies and gentlemen. Hold them to it.
I will bet you $1 million. No.
Listen, man, we got to get into this. So, guys, if you are Team Jeremy, put Team Jeremy in there, or Team Financial Education. If you're Team Everything Money, or you're voting for, or you're leaning more towards Everything Money, put it in there. Would love to know kind of where people side in all of this. It's an interesting dynamic because I think if you're looking for like personality and entertainment factor, I think Jeremy kind of might get the crowd there. But if you're looking for more value investor and an actual process on the value stocks, I have to kind of throw Jeremy under the bus. I've never seen him basically I've never seen him really break down the fundamentals on individual stocks, like using any sort of specific models. He kind of gives an outline and there's no valuation of what he should be paying. And that's kind of where, kind of where I differ from him. But we already got team everything money for Jason, and we got a team Jeremy for Jared. So interesting enough, guys.
The next face off is between them two.
Yeah, man. So guys, hey, don't kill each other in the chat here. This is good. Let me explain why this is good for financial YouTubers and why this is good. This is needed, first off, because we need to separate the entertainment aspect of financial education to the actual education of financial education, in my opinion. There is a two different story here. And, I will say once again, I have a ton of respect for Jeremy being completely transparent with his portfolio, even when it's down. But this challenge has gotten interesting. Jeremy called out pretty much anybody that was willing to challenge him.
We should backtrack really quickly to like how we even got here.
Oh, dude, yeah. Go ahead. Tell him how we got here.
It's kind of been an ongoing feud, if you will. And I've been watching Everything Money really for quite some time. I really enjoy their channel. Like I said, as a value investor myself, I love and appreciate their strategy. And but they started doing these fraud videos and putting YouTubers on their channel and throwing them under the bus. And I started loving that because it's needed. I personally don't want to be that YouTuber. I think Colton, you're on the same page.
Yeah, I will say, Ari, I'm going to come clean to everybody. And you can look at my videos. Like I caught myself going down that rabbit hole of what is popular and what people are searching for, and kind of jumping on that train. And then I said, I didn't sleep good at night. Like I was like, I knew I wasn't doing something right. Like, and so I was like, I got to hold myself to a higher standard. So that's kind of why I went away from it and really started doing valuations and breaking down individual stocks.
It's fair because, I understand the frustration. Like you can watch a video on YouTube, and when you yourself are producing quality content and value, to viewers out there. And then all of a sudden you get a guy, not even Jeremy, because there's so many others that are out there that are actually way, way, way worse.
Yeah.
That it just, it's frustrating. And we always speak about that, but just to go back to how we got here, the feud's been ongoing. And as of very recently, Paul gets on and just destroys Jeremy.
Yeah, he did.
I got up, this morning, regular day. I'm heading into work, go, film some news, and I get a text from Colton, and it's, you got to check this out.
And I even sent you the link. I sent you the link.
Oh my God.
I said, holy crap. I sent him the link, and it was just like, let me see if I can
we just spoke about this. We weren't even supposed to be live streaming tonight, but because this is happening, here we are. And so here,
I sent him the link directly to him in text message, and I was like, dude, you're not going to believe this, because we were just talking about this happening and like people having to get out of this.
I had to take a breather before getting on, in front of the camera, just to look at what was going on and digest it myself. I was so excited. This is better than a boxing match, in my opinion. Maybe I'm just a financial nerd. But
so here's the thing. And Susan, I agree with you. Like some of the tactics, like are, I think Jeremy comes off very passive and nice. And Susan, I agree with you. Like Paul is very kind of rough around the edges and blunt, more of a New England style, kind of like I can be sometimes, and probably you can be, Ari. But I will say this. It is a little bit rude, probably a little bit rude, and I think people need to be decent. We're talking about a lot of money here, but I also want to bring up the fact that a lot of these YouTubers that have huge followings and huge influences have cost people a lot of money and heartache. And now you have to take responsibility for investing your own money. There's absolutely that involved. But when you hold yourself to a certain standard, you're driving Teslas, you're living in $1 million house, and you're showing kind of like, what you're doing. Unfortunately, people take that as truth and they follow you down that down that hole. And that's the concern I have. Now, with that being said, the reason why I like what's going on here is there's going to be a ton of education that can be drawn from this, both from a good perspective and a bad perspective. What's your thoughts, Ari?
I agree. Look, this again, it started here because of Voyager. Okay, you had Jeremy pumping Voyager all day long, and Paul is reacting to that. And I think Paul, just like me and you, and I think a lot of other value investors that are out there, is just getting tired and fed up of seeing some of these YouTubers, how much money they're bringing in for pumping garbage.
Yeah.
And so, and I totally agree with Susan. I'm not a fan of the attacks on YouTube. I personally don't do it. I also think it's cruel and unnecessary. I think, like Colton always says, the scoreboard is what's in your account. That speaks volumes.
Yeah.
And it's all that really needs to be said. But I think, when you start to grow a channel, Everything Money has 50,000 subscribers, I think.
Yeah.
A little bit north of that.
No, they got 150,000 subscribers now.
They?
And yeah, they got about 150,000 subscribers. I'll pull it up here. And Jeremy is pushing about 730,000, I think. But yeah,
Everything Money has come a long way. Then,
oh yeah,
they're pretty new.
Yeah, they've absolutely blown up here. 153,000 subscribers for Everything Money right here at the top.
Jeremy's up like almost 1 million.
Yeah, and Jeremy's pushing 730. Jeremy's got a couple channels, so definitely, you hate to see people being attacked, but I do think that there's going to be some interesting things coming from this. Now, I will say Paul was a little blunt and a little rude, but I think he's tired of seeing people that put themselves up as experts and that really don't know what they're talking about and don't even have a process. And I think that's what he's kind of wanting to fix here. But there's a classy way to do things. There's a right and wrong way to do things. And he's really on the edge, in my opinion, on that. Now, I do think that he gave Jeremy kudos, and that was appropriate. The fact that, Jeremy stepped up, responded.
He shared that Jeremy responded.
Yep.
He said he respects the response. He also shared that he respects Jeremy's ability to be a YouTuber and to have the viewership that he does, but he does not respect the investment strategy. And, ultimately, so that Paul's video comes out, and Jeremy responds. Just if you're brand new to what's going on here, Jeremy responds with a challenge. It was a 1, 3, and 5 year challenge.
Yep.
He put that video out.
He started the challenge. Yeah, he started the challenge.
Paul comes back and ups Jeremy and does a 1, 3, and 5 year challenge.
10 year. I got it right here. Hold on. Yeah.
1, 3, 5, and 10. And he basically is going with the angle that if you're like a real investor, you're going to be long on stocks.
Yeah.
And so the 10 year is really what's going to show. And he's putting $1 million on the line.
Yeah. And guys, if you're just coming in, would appreciate the smash the thumbs up and consider subscribing to both Blue Line Finance and Financially Fit if you're new to the channel. Guys, so yeah, absolutely right, Ari. So how he's breaking it down is, and they're talking about this money going to a 501c3, a charity event of their choice. And so the first year, whoever wins the first year gets 50 grand. So that's obviously a small amount, but makes sense because your first year. Now, here's another thing, Ari, I want to touch on this. I think Jeremy has the biggest advantage from year 1 through 5 because his stocks are down 70 and 80%. Like we just saw today, if you look at today, like something like Tattooed Chef, like I'm just going to pull it up here, guys, and just see what
that's exactly why what Paul said is so relevant, because if you're going based off of 1, 2, 3 years, that is why Paul is saying no real investor would take the challenge there, because the real investor is focused on the long term. That's 10 years. And so I agree. I agree with where Paul's coming from. And that's where I think that he's actually going to win out, because if you look at Jeremy's investments, and his biggest one is Tesla. Then you have Tattoo Chef. Revolve, you have Skyworks. They're all drop boxes in there. You have all these growth plays that can really be anywhere in 3 to 5 to 10 years. And when you look at Paul, he's got very stable plays that are in there. Companies that are going to be here.
Yeah. Yeah. So the companies that Paul owns are actually handling the downturn better. And I don't even have to look at his portfolio, but he basically says he's up during this time, which means that he's actually outpacing the market by a significant amount when we think that the broader market is down between 20 to 30%. If he is up, he is outperforming the market drastically, where unfortunately the beta in Jeremy's portfolio is so much higher. So Jeremy's portfolio is probably double. You're probably looking at a 2x multiplier to what the markets are doing, both from a downside and an upside. So you look at today, I just looked at some of the stocks he owns. You look at today, the market's up about 1.5%, 2%. Some of his stocks now are up 15, 20% over the week. So it's like he can win in the short term when we start thinking about how beaten up some of his stocks are. So I do think he has a small advantage short term, but I think longer term, I definitely would rather be the value investor, especially when we talk about how long we could be in a stagflation type of environment where interest rates are high. A lot of these companies that Jeremy owns, they are not cash flow positive and they need to raise capital. And it's probably going to be through share dilution.
Okay, Jeremy's also got a lot of crypto in there. And I just think it's very interesting that I love that this is happening. This could not be a better matchup. And a little bit, maybe this is a little bit conspiracy, theory-esque, if you will. But I was like, wouldn't this be the craziest thing if like Everything Money calls up Jeremy and they're like, here's what we're gonna do. And it's like a boxing match, right?
Yeah, like they're setting it up. Yeah.
They're setting the whole thing up. But
Yeah.
I think it's probably not happening. It's just a quick thought in my head. But
so it started with the phone call. They called Jeremy's platform or whatever, called his hotline or whatever the heck he is, and they recorded it. And I don't know if they're going to replay it or what, but I'd be really interested in. I've actually thought about calling a couple of these people's hotlines and talking to them on a more sophisticated level to see what kind of people I'm talking to. So that's pretty interesting setup. But with that being said, I guess the guarantee was 20 to 30% returns.
Yep.
That's just
and then Paul comes down. I mean, he came down really hard, just sharing like, look, you're gonna pump out there that you can deliver through on 30% returns, but then you're losing 99% there in Voyager. And I think that's where all of this, this whole thing came from. This is Voyager going down. And Jeremy even shared it in his video earlier this morning when he was talking about, it's just because I had this one stock and,
it's not just one though. It's not just one.
And that's what he doesn't share.
Yeah, it's been a decent amount of his investments. Now, granted, he has hit on a couple different things here, and that's kind of he swings for the fences. That's just the kind of investor he is. I hate saying that he's a growth investor over a value investor because I think value is you need to discover value both in growth and in more of your mature companies. The whole purpose of investing is to find value. So like if somebody says they're a growth investor, then that means they're just willing to pay anything. And that's you're going to lose in that game. And that's what my argument has been for Jeremy a little bit. He pays any price for some of these growth companies without really doing the valuations, the market, what kind of market are they in, what kind of margins. The biggest knock I had on Tattooed Chef, it was getting a multiplier of like of a tech company or a SaaS company when it really is a food company and the margins are tiny. You can't put that kind of multiple on a food company.
Yep. And he was pumping Tattoo Chef for
a while. I mean,
win for a while. I don't know if it was interesting. It wasn't in his portfolio, or at least I didn't see it in there unless I missed the video. Maybe he sold out of the position entirely with Win Resorts.
Well, and that could be a decent little play. That's one of his value plays. He does own some value stuff, I will say. Recently, I know he started a dividend portfolio with Walgreens and all that kind of stuff. And there was some decent pickups that he had in that portfolio. And actually, that portfolio is outperforming his larger portfolio. He stated that in one of his videos.
So what's interesting is like the portfolio that gets in the spotlight is this particular portfolio where it's just these crazy stocks, hot stocks, and he's talking about them day in and day out. Do you think that's what's attracting all this viewership?
Yeah, I do. And by the way, shout out to Vinu. That's my
Win is there.
he's awesome. He's awesome on the channel. He's been helping out a lot of the things that I do on this channel. So Vinu, big shout out. Glad you can make the live stream, man. Hopefully all is well. And yeah, we'll be talking soon. So yeah, I think you're right on that. I think a big part of it is, you wonder if he got caught in this trap of these are popular stocks that people are searching for. And he started making videos and getting a lot of traction. And he's like, you know what? I got double the conviction now. I'm going to put my money in these stocks. And it just turned into this, like, I'm just dumping large sums of money into the stocks that basically pay my bills.
Well, I mean, what the conversation we were having yesterday was phenomenal, right? It was after the live stream, but let's get transparent and just sharing, like, hey, at one point in time, you were not doing the same thing, but you were just pumping videos out there about these hot stocks, and you were sharing, like, I really want to go in this value direction because that's really the type of investor that I am, but I really don't get that much traction when I do it. Now, from someone like myself who literally just talks about boring old companies all day long, I mean, I can feel that, right? Like, if I put a video out there about Johnson & Johnson, or heck, even Medtronic, like the other day, like, my results aren't going to be the Tattoo Chef results, the Tesla results, even Revolve or Facebook, right? They're just not. And I'm curious to know your thoughts on, like, do you think this is really why Jeremy's heading in this direction if now he's got the dividend portfolio and other portfolios?
It's really interesting. I think it's because he's just got such a huge he's had so much success doing one thing, and both from a short-term investment aspect, because on the grand scheme of things, a 3 or 4 year period is pretty short term when we talk about investing, right? And I think he's had pretty good short-term success with a lot of these growth companies, and then his channel blew up on top of it, right? So it's kind of hard, like, to fight that. I got to be honest. I started pumping out Tattooed Chef videos because that's what got me monetized. And I'm like,
that's exactly what I'm talking about, right? Like, I can't sleep at night pushing videos out there that, like, I'm A, not invested in, or B, really don't even believe in.
Yeah.
And maybe you did believe in Tattoo Chef, but, like, were those more videos that you put out there just because it's like the news that sells, so put it out? Right?
So it was a complete anomaly for me. I made it, and this is a good point. We'll get into this question here. So it's a complete anomaly here where I made a video on Tattooed Chef because I was big into, at the time, I was, like, really into fitness, and I was like, the food's fairly low calorie, high, kind of pretty filling, overall healthy, business backed. The numbers looked okay. And then I started reading the quarterly reports. Margins were shrinking. I had concerns with some of how they were distributing their money. I saw shares being issued a little bit, and I saw them doing a lot of stock-based compensation that were kind of questionable. And I just was like, some things don't look right here. I'm taking a step back. I thought it was overvalued at that point once they started diluting in the shares. Once you rerun the numbers and you put extra shares on the market, it takes away from the true value of the company. And then you shrink their margins, it takes away from the true value once again. So to me, the valuation was shrinking as their quarterly reports are coming out, and this was a red flag. And you can go through my videos, and my first video on Tattooed Chef, I was fairly bullish. Every video after that was bearish, bearish, bearish. Now I'm completely out of it and I'm waiting. But Vinu makes a great point here. Jeremy looks at the business. He doesn't look at valuation.
Right. And that brings me to this point. I mean, again, we talked about this yesterday, but, like, a lot of people do exactly that. And they look at the business model. It looks beautiful. They look at the product. Maybe they like the product. The product's great. But it comes down to the numbers and not the stock share price.
Right?
Like, we cannot get confused there. And a lot of people on YouTube will be like, oh my God, like, the stock share price dropped. I got to buy in now. And you start to dive into the reports, and it's like, no, Voyager, this thing's going bankrupt. Right?
Yeah. It's on the verge of bankruptcy. Yeah. And so you got a big problem now with companies like Tattooed Chef, a lot of these SPAC companies that are unprofitable, that their share price has been down 60, 70, 80%. The only way that they're going to be able to raise capital is through share dilution, because conventional markets are going to shrink. Conventional lending is going to shrink their margins at 6 and 7% interest rates. And so their price has been completely deteriorated. So now they have to dilute even more to raise the kind of capital that they need to keep their business sustainable. So there's this vicious cycle coming for a lot of these companies if their price per share doesn't turn around here soon. And we got Strongman.
That's the danger of all the SPAC deals that were going on, because it was so exciting. And it's like when Bill Ackman had his SPAC. I mean, everyone thought this was going to be the thing that blows up, right? Bill Ackman's SPAC, and it didn't.
Yeah.
Like the SPAC excitement died down, but a lot of the SPAC deals, I don't even know. Can you think of a really successful one that happened, a SPAC deal in 2020? Because they all kind of did the same exact thing.
Yeah, I mean, the charts on all the SPACs are just they come out and they're 3-4 times the price that they were supposed to IPO at, and then they just completely tanked.
It came right back.
And venture capitalists really capitalized on it. Listen, man, how you're in a strong or you're in a euphoric economy is basically going to be the consumer and pay attention to how many companies go public. Okay, how many companies have went public this year? It's minute. Not even do you even hear on CNBC?
I was going to say, I really
nobody knows. It's minute.
One.
But the reason why was we were flushed with liquidity, and there were so many unsophisticated investors willing to dump their money into garbage. And the IPO market sees this, guys. Like, they see this. And unfortunately, the retail investor was taken for a heck of a ride this year, the last couple of years. And the only people that made money are the bankers that underwrote these crap companies with the ridiculous valuations, and the venture capitalists that cashed out their shares once they hit the market.
This really reminds me of our initial conversation, literally our first phone call. And I shared with you that there's far too many quote unquote investors looking to get rich by Tuesday. And we started talking about Robinhood and how it's almost like Vegas on your phone, and the lights and the flashing, and they make it a game. Yeah. Because when something's more exciting, and we know, right? I used to work in advertising, and the key is to make something really exciting, really colorful. It's going to catch your attention and appeal to your emotions. SPAC deal.
Yeah.
Very flashy, very fun, and it's going to run up very quickly. We're all going to make a lot of money. And then look who's holding the bag there at the very last. Yeah. It's the schmuck of a guy who's jumping in and has no idea what he's doing.
Yeah, and there's going to be I believe that there's going to be good companies that come out of this. But we got Lucid, Big Bri. I hope all is well, man. We got Lucid, MP Materials. Now I'd have to dive into the financials. I dove into Lucid once before, a while back, and it was I don't remember. I think it was a decent company, but definitely way overvalued. And so SoFi could have a pretty bright future. But once again, this was
SoFi, I think, is going to take some time. But I agree, it could be bright.
But once again, this was trading between $13 to $20, and it's you can buy $5 and $6 now. So I mean, you're talking about a company that's been cut in half. And then this is a great point. Free cash flow is key. Everything that has been getting through this wicked turmoil that we've been in, with interest rates going all over the place and companies that are going belly up, free cash flow has been the equation that has held up. You talk about all the companies that have strong free cash flow and that have somewhat growth element to them over the next few years have held up extremely well in this environment. And that's why I think Paul is possibly up in his portfolio, as he stated earlier.
Well, look, also, no one knows what the future holds here, and that's key. And I think that's why, being a value investor is important, and also why it's an investor in of itself, right? When I typically classify somebody as an investor or not, I look at how long they actually hold on to a position. Yeah. Because if you're, underneath a year, I barely even want to call you investor. You wouldn't buy a business, okay, tomorrow and then sell it in 6 months or sell it in a year. You're going to buy the business, to be in the business for at least 5, 10, 15, 20 years. That's my take on that.
Yeah.
You know,
No. So listen, this is a Martin. I don't know. I think this is the first time I've seen Martin post on here. And it's a really good point, but Martin, I would say that I don't know if your team, if you're defending Jeremy or if you're defending everything money, but I would say that Peter Lynch, I don't know who he's rooting for here, but I would say Peter Lynch has a process in figuring out what companies' valuations are. So for him to buy something 80 or 90% down, he knows that the intrinsic value and the cash flow is worth well more. You can't do that you can't figure out what a lot of these companies' true valuations are because
we
they're
even have
unprofitable.
a step before we get to the valuation. I mean, the companies that Peter Lynch was investing in as they were falling, because I've seen some videos of him talking about these stocks falling, and he's like, well, how much lower can they go? And then of course they went lower. But the companies in of themselves that Peter Lynch was investing in, they weren't tattooed chefs.
No,
they weren't Teslas, right?
No.
Like these were bigger blue chip stabilized companies that he saw that they're going to be here and intact for the next 5, 10, 15 years.
Yeah. And
it's I think that's a big difference. I think that needs to be noted.
Yeah, no, I think it's a great point. But the other thing is, it's just having a process once again. Not everybody is going to be, you said this in the last video, nobody's Nostradamus. Nobody's going to figure out the outcome of anything. I could buy Tesla because the valuation is ridiculous. It gets super cheap. And then something could happen to Elon Musk and the company is just not the same ever again. And that's something you can't really equate for. Or we stay in this high interest rate environment. We stay in a stagflation environment where people can't afford to buy cars over $25,000. And you can't control that. So, but having a process is the key. And everybody has different processes. The big knock I have on Jeremy is he picks a stock and he says, this is what I think they're going to do. Nobody cares what you think. The market doesn't care what you think. What can you show me? What fundamentals does the company have where you can say, okay, if it has a good year, this is what I can project. If it has a bad year, this is what you can't do that with most of his companies.
But also throw this out there with Jeremy's videos. Like when Paul actually does videos, he'll talk about, some riskier bets and then value bets, and it's everything in between. When I see Jeremy's videos, I mean, I didn't even know the guy had like a dividend investment portfolio, right? And I think
well, he did it for a joke, dude. He did it for a joke. He has like 250 grand or over 300 grand in Voyager. I think his total dividend portfolio is 300 grand.
The dividend portfolio
is literally his whole dividend portfolio is worth basically, I think, what he put in all in Voyager. That goes to show like it was done more for like a joke and not a joke, but to kind of like a science project to see, I think, how people responded to it and how he wanted to invest in dividends, I think, and kind of just show that he can build a portfolio. But it wasn't done with any sort of conviction and purpose. It was more
even see him taking the time to like talk about the value plays, the dividend investments, right? And that's something I appreciate about Everything Money. Like if you go to Everything Money right now and take a look at just some of their videos, they're talking about how to save money, right? Like how to actually save during a recession, how to invest during a recession. And then you go to Jeremy's page and scroll through those videos and it's like, buy this stock now. Here's what I'm buying.
Let's do that. And let's do that in a second here. Let's go through their videos and kind of just talk about what we see here, and everybody can see it for themselves as well. But I want you to answer this question. I think this is a great question by Charlie. And Charlie, I'm going to break down my opinion on this question here, but Ari, you take it first, man.
I saw this pop up. I was just getting passionate, fueled up. But
I think this is a great question. I really do, Charlie. I'm gonna hammer you with this, but go ahead, Ari.
Look, I don't think that we're over bearish right now. I don't think there's enough data on the table, inflationary data, recessionary data, economic data in general, for us to really understand the gravity of what's going on. And I think the next CPI report is going to be huge and very telling. I think we need to see earnings in the next few weeks. We need to see what that looks like and digest. And then come the end of the month, we need to understand what the rates are going to be, interest rates. And just from the minutes actually released, because Colton, I know you were talking about this yesterday, 25 basis points. That's not going to happen. It's going to be 50 or 75.
Yeah. And I even think a 50 basis point could cause a rally. And I think that's why we're seeing rally going on right now, is that 50 is in the conversation. Because if you look at the data that came out today, we should not be rallying. I don't know if you caught anything.
Okay, so I was gonna, of course, I was reporting.
I know you do. I know you do because you're in the news. But I'm just saying, like, the only thing that caused a rally today was actually bad news, guys. Like, I'm not trying to like crap on anybody's parade.
Here's what I think. My perspective on it is that the minutes came out, okay, and like we spoke about yesterday, the minutes aren't really anything new. It's a reiteration of what we already knew, but it makes investors feel safe, and it makes consumers feel safe when you have the Federal Reserve, the central bank, coming out and standing by their words and saying, we are going to ensure that we will get the inflationary levels back down 2% inflation. We're going to do whatever it takes. Okay, and they have this tone. They're very confident with that tone. That's what's needed to deliver stability and peace of mind really back into the hearts and minds of investors. And I think piercing through the minutes, that's what we got. We got a reiteration of the same tone. Papa Powell's going to be there for us. Don't worry. But here's the thing. Papa Powell's tone has been changing over the last couple of weeks. At first, it was, we don't really have to worry about a recession. It's going to be a soft landing. I'm pretty confident in the soft landing. Over the course of the last few weeks, that tone has changed. Yeah. Now the tone has become, we can foresee it. It's a possibility that it will be a much harder landing than expected. Yep. It's a very, very political savvy way for saying, hold on to your seat because something big may be coming.
So I'm gonna hit on Charlie's. We got a lot of good questions rolling in here. A lot of good, dude. I will say this: I don't have a lot of subscribers, but I will say the subscribers I do have, Ari, are way more sophisticated than Jeremy's subscribers. Like they're talking about V-shaped recovery.
You're gonna start a war,
dude. I'm telling you. Listen, my subscribers, are talking. Ninja's talking about CPI data coming out, V-shaped recovery. I think Charlie's asking a really important question. Venue is talking about valuations. Like these guys, this is the channel I want. This is what I'm talking about because this is what drives stock prices. That other stuff is just emotion and it's short term. But
I want to, man. It's what we always talk about. The macroeconomics here are going to drive our day-to-day swings in the market. And speaking of that, unemployment did rise.
Yeah, and, I know. Dude, unemployment rose.
It rose by 4,000, 235,000 now in terms of employment applications that were filed. And I mean, that's important stuff. We also had the trade deficit information come in earlier today. Like this is what people need to be watching. And the reason I think the market is rallying, or at least it was rallying today, is simply because no one's actually looking at the data.
So yeah, there's two things why I think we're seeing a big rally today, and we could hit 4,000. I think we top out at 4,000. That's been my thesis for a long time. And this can be considered a bear rally. Two reasons why I think we are getting a rally. Number one is home loan. The interest rates for home loans went from 6% down to 5.3. The other thing was there's a chance that we're going to have a 50 basis rate hike instead of 75. This is a risk on appetite at this point. If you look at what was up today, we're talking crypto was up. Every major sector was up today. So when I see that, and I'll pull it up here, guys, this is what was up today. Every sector was green today. When you get these kinds of...
What bugs me is crypto's up today. And it's like I had shared something on someone's channel where I said crypto is completely based off of supply and demand, very little, if at all, any value behind it. And someone had the audacity to comment and be like, you don't know what you're talking about. Crypto has value. I'm like, it doesn't. If it did, we'd be flocking to it.
Yeah. Well, I mean, it would be performing a lot better than it is. That's for damn sure. But basically today, everything was a rally. And guess what, guys? the inversion is still there, which means that growth is slowing down. So this is not good. Like this is macro stuff we're talking about here. You have a 2-year that you can get paid for more, putting your money in a 2-year over a 10-year. Okay, not good. And if this stays like this, if yields stay flat to inverted, guys, that is stagflation at its finest when you talk about high inflation on top of it. Okay, stagflation is not good. That'll lead us into recession as well. But I want to hit
tomorrow. We have non-farm payrolls coming out. That should be where everyone's eyes are going.
Yeah, and that's one you've been talking about a lot. But I want to hit on Charlie's question because Charlie, this is how I look at it, and I don't know if you're still here. Hopefully you are. But basically, what I'm seeing, Charlie, is that the S&P earnings should be right around 233, I think, or 235. Okay, if you put a 17 multiple on that, you're roughly looking at a 3,900. S&P. Now, here's the problem, Charlie, is what have we been hearing? A lot of people have been saying that we should be lowering, people are going to be missing by 10, 15% on earnings expectations, which means that earnings need to come down. So I have a fair market value at 3,700 roughly on the S&P to 3,400 if we go into kind of a mild recession. If we go into a deep recession, I think we need to be trading closer to 2,900 to 3,300 using roughly a 15 to 17 multiplier here. That's how I'm arriving at these numbers. So I'm confident that we're kind of trading anything over 3,900, Charlie. I believe we're a little overvalued considering the fact that earnings still have to come down. When we talk about the PE of the equation, price is one side of it, but earnings is the other. We don't know earnings right now. And that's why the market's all over the place is it's trying to figure out with earnings season around the corner, what is going to be the E on the equation. And that's why I think the E is going to sit somewhere around here.
So the market is going to react based on a level of certainty or uncertainty. And right now there's too much uncertainty on the table.
Exactly. There's just not enough. We don't have enough data right now to give a good. That's why when you see these experts talking about where the market should be and what you should be buying in, they really don't know because they don't know earnings adjustments yet. What we need to see, literally 2 companies will tell us a lot, guys. We already got the chip makers. The chip makers are all over the place. You know, it looked like Micron was pretty bleak, but then it was, I forgot who reported today that Samsung looked pretty optimistic.
Samsung stock shot up today.
Yeah,
but percentage.
But the problem was, Ari, they actually, I would have to double check, but they actually had problems with inflation and they did miss on, I think they hit on EPS, but I think they had a slight miss on revenue. It was something that, but they were impacted by inflation. So
I would expect a miss on revenue, to be honest.
That doesn't show. Yeah, but the two that I really want to see is going to be Amazon and Apple. Those are the 2 that I want to see where I can be like, okay, this is what we can project earnings to be because they just drive so much of the market and what we do on a day-to-day basis. If you get a good glimpse of what they're telling you, you're probably getting a good understanding of what to expect.
I don't want to blow up your watch list that you had there, but is Apple on that watch list?
Apple's number 1, but I got a buy price at 113. So I don't know if we'll see that, but I got to
buy in at 113.
113. That's where I'm interested in Apple.
Wishful. I wish.
Man, I'm telling you, I will not be surprised if they get to 113. What was the low? 127?
I will throw this out there right now. Okay. I'm going to make a Paul statement. If Apple hits and it's a selfish Paul statement. If Apple hits 113 or below, I will immediately throw $5,000 into Apple.
Yeah, dude, this is my wish list, man. That's exactly what it is because this keeps me disciplined.
And they'll donate $500 on my end to a charity.
Oh, look at you, dude! Pulling out the big bucks. No, this is my wish list, guys. This is where I think, in order for me to get a good rate of return and where I need to build a position, these are the prices I'm looking at because. When we think about possibly going into some sort of stagflation, we talk about a slowing economy. I have to get more aggressive in a pullback. Like, so if we do go into a recession, Apple was already at 127. If you hear or 120, high 120s, if you hear recession and we hear a slowdown, you're telling me Apple can't go 10% lower from that 127? I think it's very doable. And then obviously Meta, I had a buy at 155, which it did hit those levels. Amazon, I have it breaking below 100. So these are stocks that I've done valuations on that I have to get. These are kind of the prices
JP Morgan, what do you have?
For what?
JP Morgan?
JP Morgan it's breaking 100. So I got them at 99. So both JP Morgan and Amazon, I have them breaking below $100. Because what happens is when you get that break below those major price points, you usually see a pretty significant sell off. So if it breaks below 100, you'll probably see it shoot right down to 92 or $93, and that's when I would be scooping up a lot.
So by the looks of your watch list, I can tell you're an everything money supporter.
Oh yeah, dude, I do my due diligence, man, and it's like that's why I respect the process that they have. Absolutely. I think you got to have a process. You don't have to be a genius, but having a process is key, and that list keeps me disciplined. It tells me like, okay, I've done my analysis on it. When the new quarterly reports come out and the new projections come out, then I have to rerun the numbers, because if they were projected to do 9% growth, but it cuts back down to 4%, well, then the valuation completely changes for the company over the next few years.
Of course, absolutely. Look, I think, when it comes to investing, the process is everything. And, I always revert back to this line from Bill Ackman, and it's really become, one that every time I make an investment, I think about it. And it's that at any given time, there's really only a handful of high quality positions that are out there, investments.
Yeah.
And so without a process, there are millions of investments out there that you can throw money into. But think about this. If you only had the opportunity to pick 5, just 5, I mean, you would really start to think about what you're putting your money into, and you'd really start to do your due diligence.
Yeah. 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 I mean, if I gave you, 50 grand and I was like, you have to pick 10 stocks and 2 indexes, and that's it, you're really going to be laser focused on where your money should be going. But I think what happens is when stock prices start dipping, we look at the ticker and not the company. We've talked about this before on the channel. People are so focused on the day-to-day price volatility and just the ticker, not the fundamentals that are actually underneath the company, that holy crap. You look at 3M, 3M has been selling off, and it's getting to an interesting point here. I think I have them on my watch list at 117. Now, when I put 117 on there, it was trading at 150 or something, or 140.
Where's 3M right now? If we pull that up.
3M, I believe it's in the 120s right now.
Because here's the thing with 3M, there are so many, and I should, as a value investor, as a dividend investor, I should love 3M. I really have never been impressed by 3M. I think they have lackluster overall growth, over the 10-year period. Even this is not a company that I personally would want to get invested into.
So I think to me, it's definitely more cyclical type of business here where,
for sure,
so for me, like, yes, I agree with you. I think when you look at the grand scheme of things, it's not anything like you would say, it's not anything sexy, but I did an intrinsic valuation on the company, and the company should be sitting right around 150 to 160. Pretty much that's not including the cyclicality of the company that it actually can expand possibly margins and growth rates. So for me, you're getting paid 4.6% to sit on the stock that could be, that should be probably sitting right around 150 to 160, and it's at 117 or the 100 in teens. I find it interesting because just from an intrinsic value, I have a pretty good amount of upside, and then I reinvest the dividends, I got a significant amount of upside. But I agree with you. At any price above that, I'm not interested in because of what you're saying. It's pretty much dead money. But if you're buying it at the right price,
it's such a cyclical play, and I think that's that's my hesitation with it. Like when I look at the healthcare plays that I can get invested into, the dividend healthcare plays, it's just upward trajectory, and that's really what I'm interested in, what I'm looking for, because I feel I get the value there on both ends. I'll get the dividends, and we got financial education.
Hey, I'm trying to learn something here. What are you doing?
Voyager.
But I will say that Ninja here, he has been like pretty adamant on the channel. We go back and forth. He knows what he's talking about. And, he agrees that the last domino to fall should be the earnings. And I think
I want to say the last domino to fall is actually going to be the wrap up of July, which is going to be Powell coming out and hitting us with what the interest rate is going to rise, how much it's going to rise, because the market's either going to freak out entirely, which I think it will. Even if he announces just 50 basis points or 75, the market is going to panic before he even speaks. I think that's the last domino.
Yeah. I don't know. I got a feeling I got a feeling it's going to be a 50 basis point hike. And I think the market's going to rally into that. And the market what's going to turn the market back around is going to be earnings. It's going to be the big companies really giving kind of lower guidance than expected. But I mean, who knows? Nobody knows. But it's definitely going to be something that happened. Another piece of news, Ari, that came out today that's not being talked about is I got to double check, but it was business mortgage-backed securities dealing with commercial mortgage-backed securities defaults have gone up recently, and that is an interesting tale. Because a video I did not too long ago was a video on small business owners. Roughly 40% are behind on rent. So there's definitely something going on in the commercial aspect and small business aspect that we want to keep an eye on. As I stated before, there's something a shoe that's going to drop that nobody thought was going to drop. And that's how the crash happens. It comes from a direction that nobody ever expected. And so small businesses is an interesting one because we saw the small tick up, right? We saw the small tick up on what today? The unemployment,
yep, by 4,000.
By 4,000. Now, I know that's nothing and it's probably not a big deal, but I'm wondering if that's related.
It is, though, because even though it seems nominal, right, it's slowly but surely, like week after week, we're getting more reports of these, ticks. And over the long span of time, that does create an issue.
Yeah. So I'm wondering, it would be interesting if they could break down the small business to large corporations, where are these unemployment filings coming from? Are they coming from more larger organizations, or are they coming from people that were laid off by mom and pop places? Because that's my concern is when you think about a mom and pop, and I know I'm repeating myself, but when you think about a mom and pop that works at the end of the street here, that's dealing with freight costs going up, that's dealing with minimum wage going up, and that's dealing with the consumer that's not coming in their store, seems like it's a recipe for disaster for me.
Well, the mom and pops have been hit hard since 2020 now. I mean, really very little relief for them. And big business is big business. I just think not enough has been done for small business. But it would be interesting because really the only thing news headlines wants to grapple with are like Tesla laying off employees. We're talking about big business. That's what gets people's attention. And so it would be definitely interesting to see the breakdown, the figures and numbers of small business layoffs.
Yeah, that's what I'm concerned with. It's not necessarily the larger organizations that can deal with it. It's the small mom and pop places that I don't think we're getting enough information on. And we got to remember that is the backbone of the United States economy, is the small, medium-sized businesses. And we forget that. We look at the Walmart, we look at the Tesla layoffs. That's not the problem. The problem is the pizza place down the street that employs 30 people that, keeps a little town going is the, that's the backbone of this economy.
So here's another interesting point. More and more companies are starting to, not companies, my apologies, employees of companies are starting to unionize. And that's actually really interesting to take a look at. Apple, more Apple stores, I think, started to unionize. Starbucks, of course, has been in the news for a long while with unionization. But what this is telling all of us, okay, is what's happening to the consumer's pocket, right? Like, they don't have the means to live.
Yeah.
Everybody is pressed right now. And I think that's something to take a look at. I also think if you weren't aware, and if you think COVID is completely gone, China just is, again, it's coming out of China. So whether it's, you believe it or don't.
How accurate it is.
Yeah. But I mean, look, China is, according to the news, right? Pardon me, on the news as well, or I'm like reporting this, is that they're shutting down various cities, 11 in total in various regions throughout China. Now that's really important as well, because we're talking about their GDP being impacted. And look, the sneeze in China happens, and all of a sudden we're impacted in the United States. The closure, in China, we're going to feel that impacted here. It will hit us, with the ripples of supply chain disruption, which has been
that's been the big
down now.
And what we're seeing right now is, and what we're seeing is such a like disparity of experts that are A, we're in a recession, and B, we're not even close to a recession. This is just, a minor pullback and a buying opportunity. And I think for the viewer, it's so confusing to like, what is what? For me, guys, the yields are just ignore what Wall Street is saying, ignore what you're hearing on the news. Pay attention to the yields, guys. The yields are telling us a big story here. I've never seen so much volatility in the yields. And when the yields have been flat for an extended period of time, which to me, maybe we're not in a recession. I do think we're in a mild recession, and I've beaten this horse to death. But the yields, when they start getting some separation and we start seeing some stabilization within the indexes, and the Feds are done kind of tightening and we got like a clear picture, that's when I think we realize what is what. And I think we're going to see the opportunities then. I don't think you need to rush to anything. There is some serious volatility going on with the yields here. And I'll tell you, man, something big is going to happen. I don't know what, but something big is going to happen.
Look, I think you were spot on with the yields. We spoke about it, earlier this week on one of the live streams, and come Tuesday, Wednesday, the yield inverted. And what's now really interesting to take a look at is, from a economic historical point of view, is that when that yield curve inverts, okay, since 1955, recessions have followed thereafter, all but once.
Yeah.
Okay, that's not me just making that statement, right? That was pulled and published from a report from the San Francisco Fed.
Mm-hmm.
So that's data from the Federal Reserve talking about what happens when the yield curve inverts. We do get a recession thereafter, usually 6 to 24 months after.
Yeah.
So the yield curve just inverted. And to go back, I think it was maybe Ninja's point. I forgot who mentioned it and asked if we're.
Yeah, I mean, here's another great point, and Susan, thank you for the compliment. And guys, I can't thank you enough for the participation. Ari, we're getting some serious participation here, man. So, I mean, there's just good content being created right now. And
I love this point that was just made by Ninja.
Yeah, I think that's what I think Ninja like literally is saying more sophisticated than we are, trying to describe exactly what is going on. But that's it, guys. We talked about it. The stock market is driven by day-to-day emotion, and the bond market is definitely driven by well thought out processes here. A reason, and when it's flashing red and the stock market is going up, and you have an everything rally like we did today, I'm taking a step back. And I'm paying attention to the yields, and I'm looking at how flat the yields are. And that's, to me, is saying that we're going to be in a very slow to low growth, maybe no growth environment. And when you factor in inflation on that, that is negative growth, guys.
Just go back to Warren Buffett, right? As a Warren and Buffett investor myself, right? I'm going to be greedy when the markets are fearful, and as the markets are rallying right now, I'm watching. I don't think this is anything to jump on. I know the markets today were shooting up. Markets are still open there. Correct it. It's 3:53 p.m. I am not in the States, so everyone knows. 7 hours ahead at Eastern Standard Time. And but yes, the markets are moving up, and I don't think this is anything to jump on. I'm watching, and I've been saying this now for a couple of weeks. I'm going to be watching until really Monday of next week.
Yeah, I mean, the big question is going to be, and where all this can go wrong and blow up is that earnings are blown out the water, and the guidance is unreal across basically your top 10% companies that we're all invested in.
Lowering expectations. We got to.
I know. This is why I'm not rushing to anything, because the only other way you can say is that the market's pricing in X, Y, and Z, that the market already saw through the bad earnings, and they're already starting to see that next year is going to be a stronger year. That's where you can kind of give me an argument that, okay, maybe we've hit a bottom. And I'm not denying the fact that we didn't hit a bottom. I just think I got to see what the total S&P earnings are to get a true understanding of where valuations should be. Because right now, nobody is good enough. That's why we see the disparity on TV. No expert is good enough right now to understand kind of where we are as far as valuations, where the S&P should be trading, because we don't know earnings guidance yet. And that is the big unknown. And you can't solve a problem. You can't solve X if you don't have Y. We need Y. Like, we need Y.
Short, sweet, and to the point here. There's not enough data on the table. And until there's enough data on the table, I don't think we're going to get a lot of analysts, who are speaking out about what's to come. It's all speculation. And even when that data does pour onto the table, it's still, speculation. No one can predict the future. But it's important to understand that the macro matters, okay, in the spectrum of what's happening on the day-to-day. And the economic calendar matters.
Yeah.
If you have a holding on what's about to happen tomorrow, non-farm payrolls, that's something to watch out for. Okay, next week, the 13th CPI reading, something to look out for. The market is going to shake and rattle and move before that CPI reading.
Well, I think you just take it like this, right? There's going to be, if you think the bottom is in, that's fine. I can get behind that. But I would also state that we have another Fed tightening coming up here, and we have earnings. You're telling me something can't happen in that time frame that's going to catch the market off guard. I tend to not agree with that, but that's just me. I think the market's a little overvalued here.
I'd love to get a feel for this one and throw this out to everyone. Just while we're here on the topic of team everything money or team financial education, if you guys can start throwing your top 3 investments in your portfolios out there in the comments, so we can just kind of take a look, or maybe what's exciting for you and what you foresee really taking off in the next couple of weeks. We can really get a feel for who's who, whether you're team financial education or your team everything money with value.
So guys, in the comments, put if you're team everything money or team financial education right now. Put them in the comments. We want to get figure out what the disparity is here. And then on top of it, you said what, 2 or 3 investments that they're looking at?
Yeah.
2 or 3 investments that you're looking at that you would buy today at the valuations that they're at. So guys, if you want to throw that out there, it'd be interesting to see what you think. The effects of QT haven't been realized. That's my other takeaway on that. So that's a great point. Yeah, I don't think we're going to feel QT until we get closer to the end of the year, guys.
Jamie Dimon just spoke about that as well, literally 2 days ago. About
the QT effects?
Yep.
Yeah. What did he stated?
Not even felt yet. And
yeah, I think that's a good point. I don't think and that's a big reason why I don't think you need to raise 75. I think we need to raise 25 to 50 tops, because I still don't think we felt 75. We have an economy that's kind of fluttering right now. Why push us to the edge of tipping over when we don't know the effects of quantitative tightening yet? Just my 2 cents. They should have started the tightening a while ago. Team Jacket, excited lion. There you go. Dude, Richard coming in with the one-liners, man.
Yeah, I kind of like boring lion a little bit better.
Yeah, I like boring line. I think that's fitting there.
Why? Because it's so accurate to my portfolio. It's the most boring portfolio.
So while everybody's picking either team everything money or team Jeremy, what we got going on here is, so as we stated earlier, guys, they're obviously doing a competition here. Well, we don't know yet. Jeremy, I think, has to possibly come out and kind of confirm it. But first year, winner takes 50 grand. Third year, winner takes 100 grand. Year 5 in, winner takes 200 grand. And then 10 years in, winner takes $650,000. And, kudos for Jeremy kind of being transparent with his portfolio. And, I think Paul has really...
The response, or what, as well as the response, it really does take a man to respond. And at least I also want to
we're losing you here, Ari. I don't know what's going on, but we're losing you. But we got I think that's
Am I back?
Yeah, you're back. It's just breaking up a little bit. So top 5 holdings for Jared are Tesla, TTCF, Palantir, PayPal, and Meta. So team financial education.
The slice of Jeremy's portfolio.
Yeah,
like
I think that's
zero judgments. Kudos for the market and investing in companies. Scheme here.
So you're breaking up once again on my end. I don't know, guys, if you can hear him. Ari, yeah, you're breaking up. I don't know if it's the connection or what. Let's try it again. You're back. You're back. All right. Yeah. All right. So yeah. So yeah, we're getting some feedback here. So. All right, guys, what we got here, I want to break this portfolio down really quick. So we got team financial education. Top 5 holdings are Tesla, TTCF, Palantir, PayPal, and Meta. I would say that those holdings, have a lot of opportunity. Obviously, growth, definitely a growth portfolio. I love Meta in this holding. Ari, I don't know if you can see this. What's your favorite holding in this portfolio?
I'm thinking Meta is my favorite. I think PayPal is actually.
Yeah, so PayPal for PayPal and Meta for you, and then we got another one. We got obviously we're gonna go BHP, MO. These are all more dividend type plays. You should be all about these.
I found someone I'm on with.
This looks like it might be your portfolio, bro.
I just don't have the sin stock.
Yeah, well, I mean, what are you going to do?
Although, look, in this economy, all more power to you, man. Someone's addiction is going to pay you.
Well, I mean, I got to be honest, man. I was actually looking at some of the beer companies in this recent sell-off. If we go into some sort of recession, I feel like they should perform pretty well. I was actually looking at I think Coors is a little overvalued, but I was looking at Bud. That's sold off pretty frequently. Google is top holding, and that's a nice little portfolio here. He gets good yield on it, and he's got some good holdings in there.
Okay, point with something like that.
So VOO and VTI, Amazon, Tesla, Disney. So we talked about Disney the other day. I actually like the Disney kind of being sold off and the opportunity that's at hand for Disney. I think the growth rate on Disney is probably a little undervalued, underappreciated.
Richard was with yesterday.
This is an interesting portfolio. I actually like this kind of, Richard, this setup here. You have yeah, you're a huge fan of ETI.
It's part of the foundation of my portfolio.
Yeah. Well, I mean, and I think that's what we talked about before was creating a foundation of your, creating a foundation first before kind of speculating on individual stocks. So,
yep.
So, I mean, guys, I guess we'll finish up pretty soon here, but kind of want to just touch base once again. I think this is good for the whole financial YouTube world here, because I think it's really going to start challenging other YouTubers to step up. I think we're going to see more competition. I think we're going to see, viewership kind of change around here to more quality over the entertainment aspect and the pumping. That's what I really like about what's going on here. And, as I stated from the beginning, the reason why I lean towards the everything money, and you do as well, I'm sure, is the fact that they have a process of figuring out what they should be paying for something. And here's the other question, guys. If you don't know what you should be paying for something and you buy it and it goes up, how do you know when you should be selling, or if you should be selling at all? If you don't know, you know what I mean? That's the other question you have to ask yourself.
Well, it just makes everything more of a gamble. That's really what it is, right? That's why I'm sharing, at least on my end, that if you're going to be jumping into an investment and you're only, I hate to even call it an investment at this point, but you're just in for 3 months, 6 months, 8 months, you might want to rethink calling yourself an investor.
Yeah, I like the 10-year strategy. And honestly, I think it's going to help both of their channels if they do it. And it's like, I
Oh,
imagine,
absolutely. Look, it's like a boxing match. This
yeah,
is all this is. It's a financial YouTubers boxing match, and I think it rallied all the financial nerds of YouTube to come on here and start rooting for who they align with.
yeah, I agree 100%. I also would be interested in if, what I think they need to do is start on a date, like maybe like they said, January, start on a date and they start picking individual stocks at that point and go from that point. That way, there we have a time of conception and a time of like when money is put to work. Because as I stated before, to me, I feel like Jeremy in the short term has a huge advantage because most of his stocks are down so much that, look at some of the rallies today. Like I don't even know. I'm going to type in, I know one of his biggest holdings is the Honest Company, and that's up today. That
I think his biggest holding is Tesla, if I'm not mistaken.
Yeah, I think so. And I would say,
Like, I think
but this is the
Andre
problem I'm
Jick
having.
is
This
he
is
is Andre Jick a Tesla holder?
I think he owns a little bit. I know he's more of a dividend
He is
investor.
more of a
So,
dividend guy, yeah.
but
And
so
now
like
he's crypto guy as well.
So, I mean, look at this, man. Like, this is a 5-day chart on the Honest Company, and it went from 279 to 333. That's a huge percentage gain when you think about companies that have been sold off so much. So that's the downside I see for the short term for the company. And then I'm trying to think of what other ones we said. Tattooed Chef was another one. So like some of these companies have sold off so much. Like Tattooed Chef was up 3% today. you know, over the last 5 days, it's up over 11%.
Because they're all very reminiscent of like crypto, very exciting and speculative.
But yeah, but
These
it's like,
they're going to be coming up and down and bouncing, and I think your stability is of course going to come with value plays, and that's why the 10-year time frame matters.
oh, it's huge. Yeah. I mean, like we said before, you have to be in it for the long term, not look at the tickers, but look at the actual fundamentals of the company. But yeah, I find it interesting. I think the shorter term, definitely, especially if he starts really buying heavy on the dip, right? I mean, some people don't even make 10% in their portfolio in a quarter or even a year sometimes. And you're talking about in 5 days, some of these stocks have moved 10 to 15%. I mean, I know Palantir is breaking out technically, and I did a video on them not too long ago. They were sitting around $7 or $8. $8.78. It's
This
at
almost
$10.
makes me want to change my strategy.
No, yeah, right, dude. No, because like you said, this is more of a short term, move. But the problem becomes like some of these stocks are just so oversold. Like at what point is it an advantage to kind of go more for the growth, at this point? Now over a 10-year period, I think the fundamentals will equate. So in the long term, he could lose a couple of years and still be okay. Now, what he did say was, this was interesting, and we didn't touch on this. What he did say was that he said Jeremy has to keep his same investment philosophy, meaning he can't become a value investor now. He has to stick to the growth investments that he's been taking on. So that's where it gets a little bit interesting. Does Jeremy, back say that he wants the opportunity to be able to be a value investor? Like, so it's going to be interesting to see how this unfolds. But
He also then shared, right, he has to stick to his boring, quote unquote, boring method of investing as well. So this is just to say that he's looking at Jeremy's portfolio and he's saying you can't just all of a sudden jump into, some of his type of, Farmers International, HP. Just for all of you down, Paul's portfolio is Carnival, Farmers International, HP, Intel, Facebook is in there, Walgreens. There's a few other. I think Alibaba's in there. I don't know if he sold out of Alibaba. I know a lot of investors sold out of Alibaba rather recently, but you can't just change up your strategy and start to jump into those plays. So it should be interesting to see.
yeah,
And at the end of the day, I want to just reiterate that whether you're a fan of financial education or everything money, what I appreciate is everybody is has got skin in the game, and I think we're all in this together, right? Anybody who's got skin in the game, and we're all just trying to come out on top. We're a community here together, looking to help each other out. So I'm not one to diss anybody or to put anybody down for their investments. And I'd love to just continue these conversations as we go.
Yeah, no, I agree. I think, especially some of the questions that rolled in today and just some of the comments that rolled in today were just phenomenal, guys. Like super, super impressed with some of these questions and comments and, being transparent and letting us know what kind of stocks you're looking at. Just all good, positive stuff. I think it helps everybody. Where are we as far as the stock market goes, economic cycles, what's going on. So it's just nice to bounce ideas off of each other. Obviously, nobody has a crystal ball, and we just kind of take the data in and we all digest it differently, and it's share our thoughts, and hopefully everybody benefits from it. So, I think we'll sign off here, but it's definitely going to be an interesting few months, I think, starting to see the financial realm of YouTube kind of shift here and maybe get more competitive, more transparent, and just be interesting to see how all this all unfolds. I'll tell you what I'm interested in doing, Ari, is if they do start a competition, is creating a spreadsheet of what their portfolio is, and then maybe we can layer our picks or even start our portfolio, or kind of start picking individual stocks using the same percentages. Obviously, I don't have $1 million to throw into a brokerage account.
Are you about to shell out $1 million?
No, I mean, I do have some cash on the sidelines, but that's to buy a house.
I got just on the sidelines, just in case in the next few weeks things get crazy. I got a total of $25,000 in cash that I'm
just sitting ready to let it rip.
I got 5,000 of that cash ready for Apple at 113 or less.
Hey, you heard it here first, man. You heard it here first.
I'll stick to it. $113.
113
for Apple, and I'll throw in the 5,000, and I'll put 500 towards a charity, Colton, of your choice.
All right, that's a deal, man. Sign me up. So you don't think Apple's going to break 113?
I don't think it will break 113.
Wow. Okay.
I'm hopeful. I wish it would, right? Like I would be all in on Apple coming down to 113 or less.
I'm curious. Where
at the end of the day, like if Apple came down that much, I really think for me it's like a total win. And I think giving to charity is an amazing thing, anyways. So
no, it's
more power to all of us.
It's definitely a win-win. So I just want to shout out there that the 52-week low is 129. So you're basically saying that it's not going to get 10% below the 52-week low. Is basically you're saying it's going to hold the 10% below above the 52-week low.
I'm extremely doubtful that it's going to come down to 113. But wishful. I mean, I'm hopeful that it will, because why would I love that Apple is one of my largest positions. I'd love to buy more.
So when I ran the analysis on it, the reason why I had to give it the reason why I had to get a 113 to get it like at least a 10% or 11% rate of return was that the future growth rate in the company is slowing down pretty fast. And so similar to what we saw with Netflix, if the guidance is pretty poor, you're seeing 113. I'm letting you know that right now. So
we'll see.
If they miss earnings and their guidance is poor, we're seeing 113.
Apple has been so, what's the word I'm looking for?
It's consistent.
Of course, they're very consistent, but thus far in the past, few earnings seasons, they've been very quiet about their guidance and expectations. They know what they're doing to ensure that their shareholders remain in the game.
Yeah, no, definitely an interesting company. If it hits 113, I'm in. I just don't think the risk versus reward above that is actually worth it. And I'm not trying to bash Apple, but as I stated before, when you had me pick two stocks, I told you I would pick Apple and I would pick Meta, because Apple's such a safe, steady, going to probably, like you said, the price action is not going to move a lot, but I'm going to take the risk with Meta. That's how I would do that. We'll see. I mean, we'll know pretty soon, I think. We'll know soon.
You know what Buffett said one of his biggest regrets?
Not buying more Apple.
No, I'm sorry. He sold Apple. He sold some of Apple shares at one point,
Yeah.
and he has now come out to share that that was one of his biggest investment mistakes that he's ever made.
Yeah. Yeah. I mean,
It happens.
it'll be interesting. It'll be interesting.
I
So
love Apple. I mean, Apple everywhere. Right?
I mean, you're right. The bottom line is we all use Apple at some form. But the problem is, did guidance get pulled too much forward in the last year? Like you're talking about, you're talking about all the iPads that were sold, all the all the laptops that were sold, all the Macs, all the iPhones. Okay, like is that much demand going to be here for this year? I don't think so, and I think it's going to be very disappointing, especially when we talk about holiday season when people are not buying new MacBook
We may
Pros.
have to start a bet of our own.
Dude, I'm telling you, man. I'm telling you, the over/under on Apple right now. I'm telling you, man. I will not.
I mean, we might as well have some fun with this because I think that Apple will pull through.
Yeah,
I do. I think they're going to surprise us as they always do.
they always surprise. They always surprise. I'm not going to take that away from you. But
There's a massive chip shortage, right? And even during this massive chip crisis, Apple came out on top. Like
wait a minute. That proved that you might be hitting on a point that I have. What did Apple have to do with their chips recently?
I don't want to talk about it.
So
I don't want to talk about it.
That's going to cost them more money, and that's going to delay things as well. So keep that. Just throwing it out there. Hey, I love Apple, man.
That's something Apple whitewashes.
They'll figure it. I mean, they always figure it out. They always figure it out. But all right, we'll sign off here, guys. Thank you guys so much. Hopefully you enjoyed our kind of dive into what is going on here with financial education and everything money. Just goes to show that nobody's right or wrong. The scoreboard will be the winner in the end. Personally, I just think that having a process is so important in uncertain times, especially if we're not in that market anymore, guys, where you can just buy anything. You have to have a process on figuring out valuations. And unfortunately, not unfortunately, but I think we're going to see that really unfold. And I think it's going to give more credibility to people that do have processes. And that's what I'm excited about.
Couldn't agree more. Final reminder, tomorrow, non-farm payrolls and rolling into July 13th, next CPI reading. Keep your eyes and ears open. Play safe out there and invest wisely.
That's right. We'll see you next time, investors. Peace.